Hi, this is Jeff with Fish Creek Capital. I'm taking a few minutes this afternoon to research some good dividend paying companies, and so I thought I would just record a little bit of my process so that you can go out and find some of these companies yourself. You don't even need a financial advisor. There's just so many tools available right now, and I want to show you some of the ones that I use to look at. So please subscribe, like this video, growing the YouTube channel, and I really need your help. So please subscribe and follow along. Okay, I've been looking at the energy sector, and first of all, the best way to kind of look at, I go high level first and then kind of break it down toward individual companies. We like investing in individual companies here at Fish Creek because we're focusing on good management, good cash flow, low debt, and specifically how are they paying that cash flow back to shareholders in the form of dividends. We love good growth, and then also how they're growing the dividend and how that's, if they're growing earnings, which is great, then how are they growing that distribution back to shareholders? That's a key when it comes to the compounding effects over the time. And so something that we focus on as we look at individual companies. So I'll start wide with the sector. And so energy, as I think about energy, one of the best sectors to look at as an ETF for tracking the energy sector is XLE. And so let's pull up the screen. You can see behind me, this is a tool that I like to use. This is Think Pipes. This is a Thinkorswim product, which is now owned by Charles Schwab. And we use Charles Schwab as one of our brokers. Highly recommend them. This is a great tool, Think Pipes, for using technical analysis as a tool to help evaluate companies and, again, evaluate sectors. And so I'll start here often to just see what the sector is doing, and if it's kind of going up, or if it's trending up, or if it's trending down, or if it's just going sideways. This chart, I focus on long-term charts. You don't want to try to time the market. You don't want to trade the market. That's not what this is for. I'm purely looking for the trend, if it's up or down or sideways. So these are long-term charts. I do have an hourly chart here. I wouldn't really focus on that. We're looking at the daily, weekly, and monthly chart. Again, this is the XLE. So you can see here on the daily, let's start at that time frame, and then we'll just kind of go left, in this case, behind me on the chart. So last week was great for the energy sector. That's 4 strong, good green days. On the weekly chart, it was down. This goes back to April, so back when tariffs, March, April, had the tariff scared. You can see when everything shot down, energy did also, and then it's slowly been kind of going up. We do have some red candles in there, but let's look at this monthly chart. This is what I like, and what I like to see. You've got 1, 2, 3, 4, 5 months of just green arrows, or green candles. That's actually a candle, is what that's called on this chart. But they're all green, and it is definitely trending up. So that's a good sign. So let's now. Before we move on from the ETF, sector viewpoint, this ETF does pay a dividend. Right now, it's around 3.26% on the annualized yield. So if you wanted to just take energy as a whole and didn't want to get into the weeds on looking at individual companies, XLE is a good option. They do pay a decent dividend right now. The yield is pretty good. So once I look at this, the next step I go toward is fast graph tools. Let me pull that up. Okay, so you can see this here. I've got another video on fast graphs. This is a great tool for looking at individual companies and analyzing individual companies. And let's switch screens here. So again, to try to help you think about how you can do this yourself, I just went to Grok, the X AI tool, and named on fast graphs. You can create screeners and portfolios. You can create your own portfolios. You can create your own screeners. And so I did a Grok energy screener for the energy sector and just asked Grok what would be good companies to invest in right now in the energy sector. And it came back with this list. I did add a few in here because I wasn't familiar with all of these. And so I'll start at the top of the list and, just click on each one. And then this will help me narrow down. If I see something I like, I'll write down the company, write down the ticker symbol, and then that's when I go to these individual companies and start looking at annual reports, start looking at quarterly reports, verifying growth projections and, what these companies are actually doing. So this Brookfield Renewable Partners, I'm not familiar with it. So let's click on this. Okay, I can already tell you I don't like this company. So you can see this one, it's a $25 stock, but look over here on the right, this growth rate is negative, and then they don't really even have numbers here for the blended PE, the earnings per share yield. It shows a 5.76 dividend, so that's pretty good. But let's stop right here for a second. This is a good point. Just because it has a decent dividend yield, and this would be considered medium to high on the dividend yield, it doesn't mean it's a good investment. So don't just look at the yield. That's not a way to pick your dividend stocks. Do not do that. And this is the perfect example of that. They don't even really have earnings growth here. They've got a projected earnings per share. I mean, this is all over the place, like 120%, 95%, and then it just drops way off, minus 384. And again, this is according to Fast Graphs. And again, I'll take this tool, and then if I see something I like, I'll go to the individual company and again look at the reports and start digging deeper into the actual company. But yeah, this looks terrible. So let's skip this one. Let's go down to Constellation Energy. It's the next one, and this is going to be a strong company, a much stronger company. And all right, so we can immediately tell here, we've got numbers for one showing up, got a strong growth rate, 36%. For the sake of this video, I'm going to kind of just go through this quickly for the things that I'm looking at a high level. This is a great tool. I've got another video on this, so you can go look for that on our page here. This one, strong growth, and then it's got a lower dividend yield, which is what I would expect on such strong growth. Often you'll have a trade-off. If you've got strong growth with the company, and that means earnings per share growth, then you'll likely have a lower dividend yield, if a dividend yield at all. So they are paying a dividend, but it's a low dividend, but they have strong growth. So that's a trade-off you'll often make when you're looking at dividend companies. It's good to have growth and a good dividend yield. You ideally want both, but there's pros and cons to that. Maybe I can do another video on that. But this company, okay, we've got a normal PE ratio of 23, and let's scroll back up. We're at a 35, and then you can tell this black line is the price action. So what this is telling me, just real, because I've looked at this a lot. So this company is high priced. This is I don't want to go as far as saying overpriced, but just looking at my analysis and going through what I'm used to looking for, this would be a high priced, overpriced stock. We aren't really looking for that in our portfolios. It's got a fair value ratio of 16.4. They do have an annual return here that's negative, so we'd want to kind of dig into that on the individual company, but they've got a strong growth rate, so that would be something you would want to kind of dial into once you get into the company reports. But Fast Graphs is showing a fair value of $152, and it's a $330 stock. So I would probably move on from this one too. This is not really something we're looking for at Fish Creek. Let's take, for the sake of the video, let's just do Chevron. It's one that we're all going to be familiar with as it pulls up here. So Chevron, Growth rate 3%, so much lower growth rate. Has a pretty good yield right now, 4.27% annualized. So that's pretty good right now for Chevron, I would say. Got a fair value ratio of 14.6. Right now, it's an 18.99 blended price to earnings. So it's overpriced. It's not like on sale, but it's not too overvalued either, I would say. Of course, it's going to have a strong credit rating. Let's look down here at the forecast. So this is interesting. So you can see back in 24, their earnings were higher than they're projected actually to be for 25. So that's interesting. You've got a blended PE of 18.9 now. The normal and fair value ratios are lower. You do have a expected return of 6.81 here, and then a growth rate of 13.82. So that's a pretty high growth rate for Chevron because that's a huge company. Let's look at the performance. This is a great tool that Fast Graphs shows. It'll compare it. You can compare it to different things, but this is comparing it to the SPY. The SPY is the S&P 500. That's an ETF for the S&P 500. And actually, the SPY has done better than Chevron, even over 20 years. So from an energy perspective, Chevron, it would be considered a dividend king. They've paid dividends forever. They're going to pay dividends. Chevron's not going out of business, so not just going to be a huge, return on this. I wouldn't expect, but it's going to be steady also, and you're going to get decent income off of Chevron. So we're getting a little better as we go down the list here. Let's one last company. Let's look here, and then I'll stop this. So Energy Transfer. This is one that I like. So this is a midstream company. They're not really dependent upon the price of oil. They pay a great dividend and paid dividends for a long time. So let's look at this one. This is Energy Transfer. ET is the symbol. Got a growth rate of 14%. We're at a 12.83 blended PE right now. Fair value of 15, so we're below fair value according to Fast Graphs. We got a 7.56, 7.5% dividend yield. That's a strong dividend yield. They do have a good credit rating. This is one that has paid dividends for a long time. We've got a current stock price of 17 and a fair value of $20. Okay, so you can see the progression that we're making here. So that first stock company looked terrible, exit off the list. The next one was the not Constellation brand. Let me switch back. Yeah, Constellation Energy. Constellation Brands is a different company. It was looking better, big huge company, but it was really overpriced. And then we went to Chevron and paid a very dependable, consistent dividend. Not really hugely overpriced, but not on sale either, but would definitely pay you consistent dividends. And then here we get the Energy Transfer. They're going to have decent growth. Ideally, you could get growth over 10%. This is at 8.59 is what Fast Graphs is showing. They do have an estimated annual return that's good, and it's got a good dividend. So on my short list, I would definitely write down ET, Energy Transfer, as one to go dig further into. And you can kind of see the progression just that I went through there. So let's circle Energy Transfer. We're going to take this company and dig further into it on the actual company website. You would look at the annual returns. You would look at the shareholder reports. You can dig into the cash flow there and what they're using to actually pay this dividend with. Is it cash from earnings? Those are all things that you can look at and determine when you're picking your investments. You're not guessing, you're not hoping, you're not speculating. You are actually picking strong companies and making your decision based on the data and the growth of those companies. So these are all things you can do. It does take a little bit of work, as you can see. This is how you actually beat the stock market, by taking the time to go through individual companies. Again, you remember we started at the sector level. In this case, it was energy we've been looking at. So that's XLE. That was the ETF. We looked at those charts, and then we just kind of started going down our list, and we used fast graphs as the tool to be able to help us do that. I hope this was helpful. This is, again, part of what we do here at Fish Creek. If you want help with that, please reach out. Please comment below. Please reach out to Fish Creek at fishcreekcapital.com. And I would love it if you would subscribe and follow along to our channel, and even like this video.